666.
Venture capital funding for Mena startups hits $2.3 billion and is on track to beat the 2021 total. Venture capital funding for startups in the Middle East and North Africa rose 20% annually to more than $2.3 billion in the first 3 quarters of 2022, putting it on track to potentially surpass the total investments attracted in 2021. This is according to a study carried out by Magnitt. Funding reached $512 million in the third quarter, which was the lowest since the first quarter of 2021. Magnitt said in its quarterly update, citing global economic and geopolitical factors. That, however, put total funding in 2022 at more than 80% of the 2021 level, leaving the industry with a full quarter to match or even surpass last year's total of about $2.8 billion.
Yeah, good story. We love Magnitt. They do great work. It's, real insights into the VC environment in the region. And it's a little bit like the IPI we just talked about, in that it's on track for a record year, another great year. It slowed down a little bit last quarter. So just for Saudi, they talk about the key retail, basically the key sectors are retail, services, e-commerce, and government. Again, Egypt, UAE, and Saudi Arabia all retain the 3 top positions in terms of funding value and numbers of deals. Fintech, leading industry during the period, 94 deals valued at $747 million. So what they're saying is that, they set a record in 2021. They're on track, even though the third quarter was a little slower. That was 2 point. They're on track to beat the record. What I found most interesting about this report was, Magnitt has a little graph, and maybe we can include it when we do the segment. A 4-year venture funding evolution in Saudi Arabia. So through 3 quarters in 2019, 25 million. Through 3 quarters in 2020, 7 million. Obviously, we know why. Through 3 quarters in 2021, 224 million. But here's the interesting thing about that: 99 million of that, or roughly 125 million of that, were mega deals over $100 million, right? So of that 224 million, a little over half were mega deals. 2022 through Q3, 232 million total. So, ahead of the 2021, but a distinct difference in terms of mega deals. $32 million of deals were under 100 million. 199 million were deals of over 100 million, which is, as compared to 2021, about 75 million more is mega deals, which is a reflection of a maturing market. I mean, you have companies now who not only can get valued, but also they can get funding of this amount. So it's a really encouraging trend, and it speaks to how the market is maturing, and how these fintechs, not fintechs alone, but how these startups are gaining in valuation, and it's an interesting progression, an important one.
Yeah, I mean, it's just good data points there, Richard. I think what's interesting is right now, like you mentioned, just like the IPI, it's starting to slow a little bit, and this is not really a good time for that to happen. They've just started getting some of these startups going. The investment is starting to hit the right fever pitch. You don't want it to slow down with the global economy when these startups need their follow-on funding round. So you want to make sure that the government is there to support during this time. Richard, actually, a guest we had on the show a few months back, Amjad Ahmed, who's just he's a VC guy in the region. Really was a great discussion with him. He shared a Wall Street Journal article. We'll include a link to it as well, sort of on the funding boom in the Middle East and how it's cooling down a little bit. Talks about, Amjad Ahmed actually says on LinkedIn, I'm just going to quote it, government economic reforms and funding support have been essential to the growth of entrepreneurship and venture capital, and will be critical in sustaining the momentum through this downturn. Great founders continue to build companies, so supporting them by lowering costs and barriers during this challenging period will lead to a more resilient ecosystem. He's sort of talking about, we got to keep the funding going. This momentum needs to continue, and there can't just be a throttle back, because the ecosystem is very immature compared to Silicon Valley, Germany, France, other areas where startup ecosystems are much stronger. So you don't want it to sort of, as a very young, growing plant, which still kind of weak. Yeah, just sort of playing out. So interesting times. I mean, good data, and it does show that there's money going in and there's excitement in VC in the region, but it can't just go to sleep and have all these VCs hold on to dry powder during this time.